Market rallies here. I'm hitting the sell button hard. Now, the lazy bear keeps rolling downhill, but if history has anything to say about it, it might just wake up for a quick stretch before heading lower again. Last time the S&P pushed down, it bounced and continued lower. Maybe we'll see the same thing. The gamma exposure that I'm looking at with the strikes for expiration today are suggesting we might get a rally up to 55.50 and then push down to the 5500, 5520 level. So with my bear swings already starting to unload, the profits are still stacking, but there's plenty of juice left in this move. So let's look at the charts. Stay tuned for a fun stock market fact. Taking a quick look at gamma exposure levels, GEX, my new favorite toy. We've got two key levels just before the market opens, and this is a dynamic number. It will update through the day when the market opens, but as of the close yesterday, we can see that the 5500, the 5520 levels that we've been looking at in this week's analysis are showing signs of that could draw as a magnet. We could see price push up to 55.50 as we thought earlier, and then slide down to the lows of the days to potentially close. Again, the big gamma exposure levels tend to act like magnets. Again, we'll have to see what the market looks like when it opens, but ultimately this is what we see just prior to the open. You know, that I'm a big fan of history repeating itself, and what we can see is that the last time we broke out of this stair step, we pushed lower, rallied higher, kind of like a false breakout setup, and then swooshed lower. So could we see the same thing again? We've got that pop lower, the breakout pullback. Can we see price rally 55.50 and beyond? You know, just take that previous high out and then push lower down to that 5500, 5520 level, just retest those lows. That could be quite interesting to see if that unfolds and be a nice little addition to our regular analysis by looking at the GEX levels. I will continue to be delaying my bullish bias until we're above 5700. Overall, the bearish bias is still firmly in play. And again, we push below 5500 today. Again, I'm not going to be disappointed with that. The bear swings will be cashing out. The only fly in the ointment for the moment is ADD is at that bear extreme, so a little bit of a bounce does seem likely. What could happen is what we've seen a few times. The ADD just jumps higher, which gives it a little bit more potential just to push lower. And we're already expecting a rally today, so it's not a huge stretch. On the daily chart at the top left, we can see that price just keeps pushing lower, almost in a straight line. And this is that lazy bear move that I keep talking about. It's, you know, down 2 or 3 days, up a day or sideways. And again, I think we've still got potential all the way down to that breakout target of 255. So again, we can still get there. Will it be today? Probably not. But we could see another week of bear movements as we close this week and move into next week. Here's a fun stock market fact. Did you know the first recorded stock market crash happened in 1637? And it wasn't stocks that crashed, it was tulips. Now, the markets have been overreacting to hype for centuries, whether it's tulips, tech stocks, meme coins, beanie bears on eBay. You know, the market, there's a market for everything at the moment. But human nature never changes. You know, we've got that psychology around the markets. The only thing that does change is the assets that the hype is around. Now, if you want to avoid the hype without looking at the charts all day, what if you could just trade in a few minutes per day, 10, 20 minutes a day, or, 20, 30 minutes a week here and there? You know, the SPX income system allows you to do that. So if you click the link next to this video, you'll be taken to a free training where I outline one of my favorite money-making patterns, and you'll be able to walk away with that and apply it tomorrow. So click the link and I'll see you over there.